All right, our next guest warns investors are in a distorted environment. Joe LaVorgna was the chief economist at the National Economic Council under former President Trump. He's now chief economist at SMBC Nikko Securities America. Joe, great to see you.
Same here. Great to see you guys.
What's distorted about this environment? The fact that usual relationships aren't really working out this time around?
Part of it, Melissa, and that probably explains why the recession hasn't happened yet. I mean, we had COVID. We shut down what effectively was a $40 trillion economy, if we include the business-to-business part, not just GDP. And it seems like we finally now have worked through those dislocations. If you look at the global supply chains, for the most part, they seem to be normal. What's interesting to me, though, Melissa, is the yield curve. It's continued an ongoing inversion. The fact the leading indicators continue to remain deeply negative, with most of those series contributing to the downside. And yet it seems that the narrative has developed that now we've hit a soft landing. And the point that I've been making to clients and investors is that given the lags, we're still within that window, that time frame, whereby these indicators still could be very useful. And one of the reasons we haven't had a recession probably is the fact that the government is spending a tremendous amount of money. But that won't persist indefinitely, because I'd argue interest rates are very high. And eventually, as Dan was saying, there will be cracks in the consumer.
So you think that 2024, we're going to start to see it? We're going to start to see the economy get hit?
Yes, I wouldn't be surprised, Melissa, if we're actually seeing it now. I mean, I think back to 2008, which was different in some ways, but also similar in the sense that when we went into 2008, many economists had thought there was going to be a recession. When Bear got bought by J.P. Morgan, there was stimulative tax policy. The Fed had created this new program called the Term Securities Lending Facility. Risk was, everybody was in a risk on mode back in the spring of 2008, and we were actually in recession and didn't know it until basically Lehman hit. So there are some parallels that could be happening now. Watch the unemployment rate. When that unemployment rate, every time since the Second World War, when it's risen half a basis point, or rather 50 basis points, 0.5% from its low, you've been in recession.
Joe, handicap for us the economy then. And if you were a trader, we'd ask you for levels on a stock. But give me levels on the economy. How deep? Because if we're talking about a shallow recession, you can make an argument that equities have at times plumbed down to that level, tested it. And it really depends on some of the severity. The cracks in the credit markets are things that are very tough to read. And I agree that they're there. But yes. Tell me what you're staring at, because you're the economist.
But, Tim, I don't think, look, to me, there's a recession because the indicators that have worked over many cycles are telling me there's going to be a recession. How deep it will be, I don't know. Nobody knows. It depends on what the policy response is when it happens. Had the authorities, had Ben Bernanke and Paulson done a bit better job in figuring out how to deal with Lehman, we would not have had a deep recession back in 2008. That's my view. It would have been very mild. It may have been more mild than where it was back in 2001. So it depends when you get there what happens. Because recessions typically are nonlinear, you get these psychological breaks if certain things happen that people don't expect. What the response is from the Fed and the response from the government, the fiscal authorities, is key. And as you know, next year, you've got a political election. And I think it's pretty safe to say it's going to be divisive.
So, Joe, when you look at recessions, they're only told in hindsight. That's how you locate it. So I'm of the belief, or I'm of the premise, that we could have actually been in recession in December of 2022. But pull that forward. Is there a shot we're in recession right now and we've already troughed in earnings and we're bouncing from here?
The problem, no. And it's possible. We did have an inflationary recession in the first half of 22 when GDP was negative for 2 quarters. What's interesting, and the Biden administration said the gross domestic income numbers were better, and there's some validity to that. The problem is the income numbers now have been negative. So it's possible we're in recession. But, Steve, we've never had a period where the equity market would have discounted the recession that's maybe just hitting now a year in advance, meaning the equity market bottomed last October, and now we're maybe entering one. I mean, it's possible. History would say it's highly, highly unlikely.